and welcome to Need to Know. What's the difference between a smart investor and an average one? The difference is often in the strategy. Strategies are essential for any investor who wants to make consistent returns. A smart investor knows that a well-crafted strategy is the key to success, and one of the best strategies for achieving consistent passive income is the wheel option. This option does not only provide traders with the ability to earn a steady stream of income, but is also relatively easy to understand and implement. So what is the wheel option, and how can it help you reach your financial goals? In this video, we'll be taking a closer look at what the wheel option is and how to trade it for consistent passive income. Before we continue, please subscribe to our channel so you stay up to date with our content. Stay tuned until the end to hear all our tips. Let's begin. The wheel strategy, also known as the options wheel strategy, is a two-step buy low, sell high income technique utilized by stock options traders who sell cash-secured puts and covered calls to receive stock at a discount and then sell at a higher price. To put it in simple terms, with the wheel option strategy, you buy options at a low cost and then sell them back for a higher price when the market moves in your favor. The idea is to capitalize on short-term moves in the stock or index price to generate consistent passive income. What is wheel option? The wheel option is a strategy that involves buying and selling call and put options simultaneously. This allows investors to capitalize on bullish, also known as a call, and bearish, also known as a put, moves in the market. The wheel option is a strategy that can be used with any underlying asset, such as stocks, indexes, commodities, or even currencies. The process involves buying both a call option and a put option simultaneously, then selling one when the price moves in either direction. It is important to note that with the wheel option, you must buy both options at the same strike price and expiration date. If you buy a call and put option both with a strike price of $50, you must wait until the expiration date before selling either one. People often refer to the wheel option as a doubling up strategy because you're essentially doubling your investment by buying two options. Before digging into the how to process, let's discuss some basic details to understand clearly. What do selling options mean? The wheel option involves selling one of the two options you bought when the price moves in either direction. Selling an option means giving someone the right to exercise the option, meaning they have the right to buy or sell the underlying asset at a specified price. If you choose to sell an option, you will receive a premium. This is how traders make money with the wheel option, by selling one of the two options for a profit. The options wheel is based on the premise of option trading. Maybe you're an experienced buyer of options, but trading options have struck you as terrifying due to the potential for significant loss. Despite what you may have heard, selling options is relatively simple. So selling options is the way to go if you're looking for a reliable and successful option technique. It is important to remember that the premium for an option is due at the time of purchase. Also, keep in mind that a single share of stock options usually represents 100 shares of the underlying stock. Thus, a $1 premium would imply a $100 outlay. Cash secured put versus covered call. Now that you understand the basics of selling options, let's look at two popular strategies for trading with the wheel option: a cash secured put or a covered call. A cash secured put is when the investor buys a put option and simultaneously sets aside enough cash to cover the purchase of the underlying asset at the strike price. This strategy is often used when the investor believes the cost of the underlying asset will fall. On the other hand, a covered call is when you buy a call option and own the underlying asset. This strategy is often used when the investor believes the underlying asset price will rise. How to trade the wheel option for consistent passive income. No doubt, the wheel option is an excellent strategy for consistent passive income, but you must understand how to trade it correctly. Number 1. Identify a suitable underlying asset. The first step is to identify a suitable underlying asset. This can be a stock, index, commodity, currency, or financial instrument. The important thing is to pick an asset with a liquid options market and ample trading volume. This will ensure that you have enough liquidity for your trades. For example, if you're trading the S&P 500 index, you should use options traded on the Chicago Board Options Exchange or CBOE. Number 2. Place your trades. Once you've identified the underlying asset, you can place your trades. To do this, you'll need to buy both a call option and a put option at the same strike price and expiration date. Check the margin requirements for each trade, as some brokers may require additional funds to open a position. The key is to buy both options at the same price, as this will help reduce your risk. Number 3. Monitor your position. We all know that markets can move quickly, so monitoring your position is essential. Pay close attention to the underlying asset and ensure it is moving in the direction you anticipated. If the asset is progressing differently than expected, you may need to close your position before expiration. If you didn't quite get it, let me explain in detail. As we know, the goal of a wheel strategy is to capitalize on bullish and bearish market moves. You're betting that the underlying asset will move how you expect it to, but sometimes it doesn't. Hence, monitoring your position to close out your trade before expiration if the market moves against you is crucial. Number 4. Close out your position on expiration. Finally, once the option expires, you can close out your position. If your trade was successful and the underlying asset moved in the direction you anticipated, you could keep your profits. You'll have to close out your trade at a loss if not. The wheel option is a great strategy for consistent passive income, but it requires a bit of practice and understanding before you can start trading. It doesn't mean you will fail in every trade you place, but it is essential to understand the risks associated with the strategy. Who can get benefit from the wheel strategy? The wheel option strategy can be beneficial for various types of investors. For starters, it is an excellent option for new traders, as it helps reduce some of the risks associated with trading. Additionally, experienced traders can benefit from the wheel strategy by diversifying their portfolios and increasing their profit chances. Finally, the wheel option is also beneficial for investors who capitalize on short-term market movements but want to take on manageable risks. All in all, the wheel option is a great strategy for traders of all experience levels. When to use the wheel strategy? The wheel option strategy is best used when you clearly know what the market will do. This means you should be familiar with technical and fundamental analysis to make educated guesses on market direction. This strategy should only be used when there is ample liquidity in the market, as this will help reduce risk and provide you with consistent returns. Finally, the wheel strategy should only be used when you have done your research and feel confident in your prediction. So that's the wheel option strategy in a nutshell. It's something that can be used to generate consistent passive income over time. As long as you are able to select profitable options contracts and manage your risk well, this strategy can help you maximize profits from the stock market without having to actively manage it every day. Are you ready to give it a try? Good luck and happy trading. If you enjoyed the video, make sure you give it a big thumbs up and subscribe to our channel to keep up to date with everything you need to know. Thanks for watching. Congrats on taking control of your personal finances. See you in the next video.